Before starting the video, click the subscribe button and turn on the notification bell. Hello and welcome to House of Commerce. So today's lecture is about adjusting entries, and we are moving towards the financial statement. And in this lecture we are gonna discuss two detailed questions with entries and reasoning, and so shall we discuss in part 2 as well. So this is our first step towards the financial statement, so stay tuned and watch the whole lecture to understand the adjusting entries in a better way. The most important step where the students commit the mistake is the amount of the entries. Although the student understands that what shall be the entry, but they get confused in what amount they should write in the entry. So the answer is that by which this unadjusted trial balance item is increased or is reduced, we shall pass the entry by that amount. Some students commit the mistake that they pass the entry by the adjustment amount, or they pass the entry by the same amount which is written in the unadjusted trial balance. So we shall pass the entry by that amount by which the unadjusted item is being reduced or is being increased. So at the very first, you just have to see this trial balance. This is the first step that you have to look for while passing the adjusting entries. So we are supposing that this is the trial balance which is prepared by the company's accountant on the basis of past practices or the track record. As the company has recorded, for example, if the company has recorded a supplies expense as $1,000, so this might be assumed that the company has a practice to record $1,000 every year, and the accountant has recorded the same in this year as well. But in this year, at the year end, we come to know that this supplies expense is just based on estimate, and the real figure is given in the adjustment. So we will correct it according to that adjustment. Either we will increase the items given in the unadjusted trial balance, or we will reduce the items given in the unadjusted trial balance as per the adjustments given below. So this shall be our criteria. I repeat that we will either increase the items given in the unadjusted trial balance, or we will reduce the items given in the unadjusted trial balances. So let us start this question. We have given the first adjustment that depreciation expense on motor vehicle for 1 month is $500 and on office equipment $100. So we will pass the entry which shall remain constant. I repeat that depreciation expense entry shall remain constant. So depreciation expense debit and accumulated depreciation of motor vehicle and on office equipment shall be credited by 100 and 500. The amount is given here. And depreciation expense by the total amount 600 shall be debited. Then the second adjustment, interest accrued on loan payable $150. So as we all know that accrued does not have a specific meaning. If it is written with income, it means receivable, and if it is written with expense, it means payable. So here we have interest accrued on loan payable, means we have to pay it. So this shall be expense and payable. So we shall not adjust the upper one with this, but shall it pass the entry directly with this amount. So the entry shall be interest expense debit and interest payable credit by 150 and 150. Then number third, receive $240 invoice for Austral Oil Company for fuel used in the business. So here we have to pay this expense and it is not yet paid. So it has become the expense, as we know that the expense, either it is paid or not, it is an expense for the company, and income, it is received or not, it is an income for the company. So on accrual basis, it shall be expense. So what shall be the entry? This is payable for the company, so we shall debit the expense, and credit the payable account because we have to pay it and it is our liability as well. So 240 debit and 240 credit. And number 4, office supplies of 425 was determined by a physical count. Now we have come to know at the year end that the office supplies is 425 actually, and not that one which is given in the unadjusted trial balance, which is 700. So what to do? Now we have to reduce the office supplies and we have to get it on its real position. So what we have to do? We have to reduce the office supplies, and office supplies is an asset. By reducing it, we will have to credit it by the amount by which it is reduced. So it is reduced by 700 minus 425 and it shall be 275. And then the asset, when it is consumed or expired, it becomes an expense. So office supplies expense shall be debited by 275. Then on number 5 we have the balance of prepaid insurance account is the cost of a 12-month policy purchased on 1st July. Here we are standing at 31st July. So it is only expired of 1 month. So here we have prepaid insurance of 900 and it is purchased for 12 months and it is only 1 month that the insurance is consumed. So this 900 shall be divided by 12 and multiplied by 1, so we shall get 75. Then we have to reduce this prepaid because it is expired by 1 month. So by reducing it, prepaid is an asset and it shall be credited by 75, and it is converted as the expense has been expired or has been consumed, so it shall become an expense. So insurance expense shall be debit and prepaid credit by 75. Then the last one, electricity used in July but not paid. So whatever is used and not paid, it is an expense although it is paid or not, and it is payable as well, so it will create a liability as well. Then we will have to debit the expense and credit the liability by the name of accrued electricity payable or accrued expense payable, whatever, by the amount which is given and the adjustment as 825. So let us move to question number 2. Here we have an unadjusted trial balance and few of the adjustments. So the adjustment number 1, supplies on hand 1,200, and in the above trial balance we have supplies of 2,000. So how to pass the entry of this? Now we have to reduce the supplies from 2,000 to 1,200. Means these supplies are being reduced by 800. So what shall be the entry? The supplies shall be reduced, and supplies is an asset. So for reducing it, we have to write it on the credit side. And supplies expense shall be debit because asset, whenever it is consumed or expired, it shall become an expense. Then number 2, a utility bill for $150 has been recorded but will not be paid until the next month. So what shall be the entry? That we have recorded a utility bill means it has been incurred and the services against that utility bill has been availed. So what shall be the entry? We shall debit the expense and credit the payable because it has not been paid yet. Then number 3, insurance policy for a year. So here we have insurance policy of 2,400 and we're assuming that insurance policy was acquired on 1st January and now it is 31st January. So insurance has been expired of 1 month only. So how to calculate this? We have to reduce this prepaid insurance, and by reducing it, it shall be credit. So insurance prepaid shall be credited, and as it has been expired, so it shall be debit by an expense. And we have to calculate for 1 month only, so this 2400 shall be divided by 12 to calculate per month policy, and per month shall be 200. So insurance expense debit, prepaid insurance credit by 200 and 200. Then on number 4 we have 2500 of unearned service revenue has been received at the end of the month. Here we have unearned of 4000, and we have earned 2500. So what shall we do? We shall reduce this unearned, and as we all know that unearned is a liability on the company. So when the unearned shall be reduced, it shall be debited as it is a liability, and deduction in the liability shall be debit. And we have earned it, so it shall be service revenue credit, and the amount given by the company is 2500. So 2500 debit and 2500 credit. Then salaries of 1500 are accrued on January 31st 2010. So the simple entry shall be passed, that expense debit, and whenever it is given accrued, so we shall pass direct entry and we shall not adjust it with the upper one. So we shall pass the entry expense debit and payable credit by the same amount of accrual, and it is 1500. So expense debit and payable credit by 1500 and 1500. Then number 6, office equipment has a 5-year life and a residual value of 3000. Use a straight line method to depreciate. So we have office equipment of 15,000 and we have residual value of 3,000. Now we shall deduct this residual value from the cost, and we shall divide it by the total useful life of 5 years. So what shall be the entry? It remains the constant depreciation expense debit and accumulated depreciation credit. So what shall be the amount? 15,000 minus 3,000 and divided by 5. So we shall get 2400 each on debit side and on credit side as well. Then at last we have invoice representing 3000 of service performed during the month has not been recorded as of January 31st. So this income, this service has been provided, but this income has not been received. Although it is earned by the company, but it is not yet received, still it will be an income. So what entry shall we record? We shall record the receivable debit and the revenue credit by the amount which is earned. So 3000 has been earned, so we shall record the receivable debit because it has been earned but not received as it is shown in the adjustment. So we shall debit the receivable and credit the revenue by 3000 and 3000. Now that's all for today's lecture. If you have any question regarding today's lecture, you can put your question into the comment section and that shall be answered into the next videos. Till then, good luck.